Hey everyone, welcome back to Poplar Preparedness. We're going to be discussing today how Wall Street and the turmoil that's going on right there underneath the surface of everything is going to impact jobs on Main Street. If you are invested in the market, this relates to you. If you have a job, if you're working in business, if you're being paid by a business, this is going to impact you. A lot of stuff is happening that you need to be aware of. If you're preparing for financial recession, depression, if you're talking about the potential for financial collapse, you're going to want to tune in for this. All right, folks, this video is sponsored by Genesis Gold Group. There is a lot happening out there in the world, both in the markets and the real world, and we have a lot to be concerned about. But one thing you can just nail down is if you have money sitting in an IRA or 401k and you're kind of concerned about what to do with it, you can talk to our folks at Genesis Gold Group, and they can talk to you about investing in physical gold, silver, platinum in a vault. That way, at least that asset can be a bit secure. All right, folks, you can find them down in the description down below. Talk to Jonathan over there. But let's talk about the broader market for a moment here. What is going on here? A lot of you have probably heard the term FTX kind of tossed out there, and maybe you've heard something about the cryptocurrencies collapsing. And there's a lot going on there with that. FTX was one of the largest exchanges where you could trade and exchange Bitcoin. A lot of people held their assets in there. Kind of think of it as like a crypto bank, right? And a lot of people had deposits of cryptocurrencies at that bank. And then lo and behold, they started to pull their money out of this bank, and the bank said, actually, we ran out of money. And everyone says, but we have money deposited here. And as it's been coming out, the CEO there, Sam Bankman-Fried, or Fried, so Bankman is Fried. His name is strangely appropriate. And he, for some reason, has very soft hands and has a hyphenated name. But this guy, who I'm making fun of, decided that it would be a good idea to steal somewhere to the tune of $1 billion from his customers, his depositors. Yeah, so I don't feel bad at all making fun of him a little bit. He is under criminal investigation, even in the Bahamas. So when you're trying to get out of stuff and you go to the Bahamas, even the Bahamas have basically said that he's not supposed to go anywhere because he's under investigation. Basically, he transferred assets from the bank over to his investment company, where he leveraged them on unstable and risky bets. And so now you're saying, I don't have any cryptocurrency, or maybe you do. Maybe I have cryptocurrency, but I have it somewhere else. Well, first off, cryptocurrencies in general are taking a big hit because of this. So that's mostly developed. Will it continue to crash? Possibly, but a lot of people are kind of feeling like at least this level's kind of, the damage has been done. Here we are at the new level. Remember, there's a lot of people who use the cryptocurrencies outside these banks, outside the exchanges, which is kind of what cryptocurrency is designed to be done. That's a safe and secure way of using it. But what you need to know is that lots of banks and private investors and corporations have invested hundreds of millions of dollars to FTX. And they've been waking up over the last few days with their numbers people looking at things and saying, hey, you know this $130 million that we've loaned or invested in FTX? It's now worth zero. On our books, it says $130 million. We have to mark that down to zero. That was what one bank just did on Friday. And the question is how many more banks are going to have to do that, where they're going to have to mark something down, significantly down, basically to zero, because they can't be repaid. this is going to have a major impact on more banks and more investors. There was some basketball star that invested a whole bunch of money, and apparently he's out of money because of that. So cryptos are crashing. And we also saw that this kind of corresponded to a major move in the markets. Stocks went just skyrocketing Thursday and Friday. And that was partially due to the dollar crashing, which was due to the good inflation number come out. And I say good. I think it was 7.7%, which everyone's there like, wow, that's not so bad. It's actually really bad, but you know, especially since it's a fake number. It's well above that number, but for investment purposes, they said, wow, that's not so bad. Maybe the Federal Reserve will stop hiking interest rates soon. So that means stocks got a party. That means gold and silver need a party. And so basically everything started spiraling upwards, and the dollar, of course, was spiraling downwards at the same time. But separate to that, the cryptocurrencies were crashing as well. So what we're seeing is major market moves. The question is how many of these banks got caught being short in the market? How many of these banks have gotten hammered on the cryptocurrencies? And how many of these banks had invested money into FTX? Some people are whispering this could be a Lehman Brothers type event where this bank, not really a bank, cryptocurrency bank going down could cause other businesses, banks to go down. Now, you and I are probably not shedding a tear for the bankers out there. I certainly am not. But realize one bank going down after the next can impact significantly the stock market, which can impact significantly hiring practices out there by companies. And that's going to impact. Now, this coming week, starting today and going through the rest of this week, we have a lot of retail companies reporting their earnings. The big one, of course, is Walmart, is on Tuesday, tomorrow, to report their earnings. And let's just say most people are agreed that it's going to be pretty horrible. We're going to hear some really bad numbers. Walmart's got way too much inventory that's going to impact earnings, and sales apparently are down significantly. That's kind of what Amazon was showing, and where Amazon goes, basically Walmart is going to be somewhere in the same ballpark. And that's going to probably be another blow to the markets. So there's a lot going on under the markets. The market's popped up, but there's this question, are more banks going to start collapsing? Are other corporations exposed to this FTX nonsense? Could be. And on top of that, we got retail earnings coming out. And if people aren't buying stuff, that's bad for the economy, which means we don't need quite so many people working. I mean, they've already been working at Walmart and these other stores to replace all the workers anyway with, robots that people have to use for themselves. But Target and Alibaba are also coming out with their earnings this week. And the question is that made this whole stock market thing go up in the first place is the Federal Reserve going to stop hiking interest rates? Is the Federal Reserve going to start pumping money back into the markets so that we can all keep going on for more glory days? Well, they don't have any more political pressure to do that. They had extreme political pressure on them to stop hiking interest rates right before the election, didn't they? Well, that political pressure, at least in the United States, is gone. So if they didn't do it when they were under pressure there, why do you think they're going to suddenly start now? Smart money is that Federal Reserve hasn't changed a thing, and they're going to keep on hiking. And they're going to try to get this inflation monster under control, because at least they have some semblance of sanity. Not a lot of sense of sanity, but like a semblance of sanity. And that means that they need to at least pretend like they're trying to get inflation under control. And so they're going to go keep hiking interest rates. But what people don't realize is how much damage these interest rate hikes are to the economy at large. There's a lot of money. We are up to our eyeballs in debt. And the interest rates going up means a lot more interest has to be paid by corporations, by individuals, and of course by governments. A lot more interest is going to really start to drag down and weigh down the economy. Things look like they're good, but we've been floating on easy money. Now that money's starting to tighten up with interest rates, we could see things grind to a halt economically very quickly. So whether you believe SHTF is right around the corner, whether you think we're going to get into a nuclear war with somebody or something out of the wefers is going to just suddenly take us by surprise, and that's going to move us into an SHTF situation, or whether you're thinking it's something a little softer, like we're going to have a lot worse inflation, a lot more depression, a lot more food shortages. This is definitely coming down the pike at us. If you have work right now, that's awesome. Well, maybe you're not so excited about it, but it's putting food on the table, right? The problem is with the economy turning down rapidly, we could be seeing that a lot of jobs disappearing. So this is something you need to be planning for. This is something you need to be preparing for. Keep putting away some finances, some assets. Keep putting away the food. Keep putting away things for the future, and be aware that things could turn hard in the next little bit. And unfortunately, when we see this recession escalate into more of a depression type thing, it may take a while for us to claw back out of this. We have so much debt and we have so little assets that we don't really have a lot of the opportunities that we had back during the Great Depression. I know, it being worse now, situation-wise, than in the Great Depression is kind of a sobering kind of comment to make. But like I said, I just want you to be aware that there's a lot happening underneath the market right now, and a lot of companies are having some really tough conversations in the boardrooms. They're seeing the sales dropping. They're seeing their inventories way too high. Orders are slowing down dramatically. It's just like, as people say, it's like the economy is hitting the brakes hard, and shipping freight is not moving across the ocean right now. Like, freight is like slowing to a halt because orders have stopped. And that's big news. So pay attention to kind of what's going on there. Focus in on what you can control: your home, your family, your friends, your assets, and batten down the hatches, because it seems like a storm may be upon us very shortly. All right, folks, thanks so much for watching. If you found this video useful, helpful, you might want to check out this video right here. Otherwise, I will see you later. Steve Poplar, out.